oil for the week. So starting on Monday, price was very volatile, wicking to the highs and to the lows. There was no setups for the day. It was looking for a short setup in London, but it didn't present. It was a micro M. And then coming into Tuesday then, we've had a spike higher, and we've just spiked the prior day's high a tiny bit. So this is classed as an inside day. Monday's range, that's the high, that's the low. Coming into Tuesday, same as Monday, making highs and lows, just a consolidated market, continuing higher. If you scrunch the screen up a little bit, all it is a bigger creeping trend, with the fact of the swings are a lot bigger than usual when they're normally like this. A lot bigger, so I'm thinking, okay, coming into Wednesday, what I should be thinking is there should be a continuation with a trend. It's like a channel, an upwards channel, continuation with the overall trend going higher. But we had the trapped volume up high. You can see on the daily there, we had trapped volume up high. So on the coming into the Wednesday, I was expecting for price to, I did know that longs could be taken, but I was expecting price to come up for the third drive, as they already presented the 1, 2. I was looking for a third drive at the higher of the day for the big sell-off in price. But what happened? Price came down. We've done 1 low, 2 lows, third low lower, and if these two singular lows, it put me off a little bit because this low was higher than this one. So if you put this over it, that is what it looks like. And on the setups, I like it when it's level, but technically it is level because they're both touching the numbers, the zeros. So you can class that as level. Then the 1 lower drive as well, which that cleared the consolidation. We've then a bullish engulfment at zeros with numbers missed up higher. You could take longs as well, and with the last 2 days, yes, this did break out, but it's kind of 2 inside creeping days. It's going to be an explosion in price. It's either going to be down or higher, and it presented a down trade. So when you see the trap traders from the prior day's high, just always remember you can take both sides of the day, both sides of the trade, depending if it's at the high of the day or the low of the day. So when you've seen this coming down to the low of the day, reevaluate, see any long trades setups, which it was there. That's a perfect 1 to 5 trade, and that's not even holding it on too long. That's simply doing the measured move here, which you could even hold it up to the highs, up into the prior week's high for a 1 to 6.8 explosive move. Coming into the New York session then, and into the end of the day and the Asian session on Thursday, price had a huge creeping trend. So this price action here is technically the same as this, but this is just a lot more squeezed. That's just a bigger swings in it, but the same outcome comes from it. So with this now, coming into the London session, I'd be looking at a type 3W because of how much creeping, how big the creeping trend is. Coming in, we've had a consolidation, then price come down into the low. So we're still in the creeping trend. It's not going to be perfect. It's not always going to stay like this before it goes off. It might consolidate after the creeping trend before blowing off in the type 3W, but it's still all the same. So we've come up with creeping, came down, made the low, made the high, wick down for the extended W, straight back up. That's what you have to realise on the extended W as well. A pin hammer could be it, so it could only be 1 candle. It doesn't have to be 3 different candles going down below, breaking the low and coming back up higher. The pin hammer does the same. At numbers, explosive move. We've got the consolidation here, which we could take the measured move of. 2 moves, even 3, it's come up, started consolidating at the end of the London session, you'll be getting out. That's a 3 to 6 potential. And then due to it being day 3 now, because this is an inside day, we've got day 1 longs in the market, day 2 longs in the market, day 3 longs in the market on day 4 Thursday at the high of the week after explosive price movement into the 3rd level, a sell-off in price, peak formation back up higher into the people who got it correct the first time, and then the sell-off in price to break the structure down low. So creating Friday for Thursday is the trigger day, first red day, consolidation, up high, trap volume, break a structure, now looking for a sell-off in Friday. We didn't get that, there was nothing in the London session. And coming into the New York session, I was looking for 3 drives, but it wasn't there. Also nearly presented here with a 1 drive, 2 drive, 3 drive, but it didn't present. so I left the trade. It's Christmas weekend this week, so I'm going to leave Monday, coming back into it because it's Boxing Day. Price may be a bit different, so I will leave that there. We do have trapped volume now up high after the first red day. Delete this quick. The first red day, so then at the prior week's high, we have trapped volume. So Monday now, depending on how it's going to present, if it might just be an inside day, and then Tuesday be a big bearish day. Maybe, obviously anything can happen, price can go higher, but it's just a potential now if it sets up correct. Right, going on to the US100, it's just a quick setup I wanted to go over. Came into Monday, we had a potential for 3 drives, 1, 2, 3, closing at 1 PM there. To be fair, I only just noticed this now when I'm going back over it. I wasn't focused on this pair on Monday. Yeah, we're at the very lows on Monday, so it's not the best opportunity, but the potential is there. We've had not 3 movements up, but we've had a big movement there. We've had a head and shoulders up high, horizontal pattern also. That's the biggest thing about it, is a horizontal pattern, so it has less chance of morphing. From Peter Brandt. Less chance of morphing, so it's come off the zeros, 3 doji candles with a big bearish engulfment, explosive trade down. That's one on Monday, coming down lower. Tuesday, there was no trades here, but there was a short squeeze lower if someone was to take it, but not in my setups. I did leave the pair now. There was a potential 1, 2, 3 bullish engulfment going through the high of the day, so what you could have done is entered on this pin hammer. There was a potential for a 4% trade there also if you did want to take that, so there's no point holding this down to the very lows because of how low we are simple as that. I don't want to be holding down low. Closing up on Tuesday, we had a lot of trap volume down low. Looking here, we had the first green day also, with the day going below the prior day's low and closing back up above. Trap volume down low, trying to get traders to go short. Coming into Wednesday then, day 3, so we've got 2 trades already. We've got a 1 to 4 trade, we got a 1 to 4 trade there, and we got another 1 to 3.5 here. So this trade, we've got track volume down low. That's the trigger day. Coming into Wednesday, on day 2, after the first green day, you're looking for longs. Only in the US session as well on this pair. We've had a nice, so coming into the US session, you've seen a consolidation up high. We know now if the price does come back down lower and take out these lows and a consolidation in the zeros with a setup due to the trigger day, I'm going to take this trade. We've come down, we've got the doji candle, 1, 2, 3. Even if you don't count the doji candle, you've got the 1 drive, 2 drive, 3 drive, pin in the low, coming back up in with the pin hammer. You can put your stop loss, if you want to put it down below the wick, you can, but you can also put it just below the numbers because price should be explosive. Price did come up then and close back lower, so you don't go break even until this closes, although it did break the structure. It didn't break it because it hadn't closed. The next candle instantly closed above, you break even, and in an hour and a half you've got a percentage. Price then went into another consolidation, hit the highs, pin hammer, back down for the pump and dump. So there's 3 potential trade opportunities here on the US100 in the Christmas week as well, where everyone says you should not be trading because it's quiet and less volatile. It's more trades than ever here. It's 1 trade there, 4%, 3.5. And then on here you had I think it was a 3.5% trade here, and potentially I think it was like a 5, 6, 7% trade there. So there's plenty of opportunities in the Christmas times. You just got to stick to your best trade setups, your routine and your process.